Hey people, Jason here, and this is Bo Boom Bear Bust. Thank you for joining me. Alright, so we've got some information coming out of Peter Schiff, and many of you following this channel and following housing and the economy are probably familiar with Peter Schiff. He tends to be bearish. Now, he's been bearish for quite a long time in many sectors of the economy, so I don't think we should take everything that he says as the Bible, so to speak. You know, for example, I'll give you a case. He actually said Bitcoin was in a bubble, I believe, back at $600 or $1,000. And he may have been right, but if you would have listened to him, you would have missed out on some huge gains when it ran all the way up to 20,000. Okay, he's been saying the stock market's, is overvalued for many years. Okay, but to give him a little bit of credit here, you have to agree with what we talk about here sometimes too. It's hard, if not impossible, to predict exactly what's going to happen. Why? Because everything is manipulated by a small group of people at the central banks, all right? And that's what Peter's saying right here. He is predicting the possibility, now keyword possibility, of big declines in home prices, and we're talking about 50, 60, 70%, if the Federal Reserve chooses to raise interest rates aggressively, okay? So the tricky part is to figure out what the game is, or what the plan is of these bankers, these central bankers, right, making these decisions. All right, so unless you're a mind reader, or unless you're somebody with inside connections, without being one of those two inside people or a mind reader, you just kind of have to put the dots together and figure out what are these people up to, right? So that's what Peter's laying out here. Now, this is a very long interview. It's over 30 minutes with the X22 Report Spotlight with Dave over there. Okay, as I typically do, I'm going to put a link to the full interview, all right, and also some other information on Peter Schiff and his channel and so forth. But let me put this audio out there of what he says could happen if the Fed does raise interest rates aggressively, okay? Okay, then after this clip, we'll talk more about why the interest rates may need to be raised aggressively. Okay, but they could also cut interest rates and also cause hyperinflation, which you're going to hear too Peter talk about here. Okay, so here's the clip.
What's going to happen if interest rates go way up? See, the government assumes that real estate prices go down by 30% in an environment where interest rates stay the same. Well, what if interest rates go up? Real estate prices go down by 50%, 60%, 70%. I mean, the banks are going to lose a fortune because all the real estate collateral for their loans is going to implode. And of course, if we have a big stagflationary scenario in a recession, corporate earnings are going to implode. We have record amounts of corporate debt. A lot of these corporations are going to end up in default on their debts. I mean, consumers, credit card defaults, auto defaults, they're just going to skyrocket. So, people are not going to pay back the money they borrowed, and the Fed's not going to be able to bail anybody out. I mean, if the Fed is fighting inflation, if the Fed is raising rates as banks are failing, they can't bail anybody out. They can't ease and tighten simultaneously. See, the real risk is that the Fed does bail everybody out when there's inflation. They do slash interest rates, even though inflation is going higher, in which case we end up with runaway inflation or hyperinflation. I mean, that's the real worst case scenario.
So you're saying that really it's a no-win situation for them, because if they lower the interest rates, we have inflation, and if they keep raising the interest rates, then we have this problem that you're talking about.
Yeah, we don't just have inflation. We're going to have inflation anyway, right? So if they don't raise rates, the inflation runs out of control, right? It becomes a forest fire. They don't put it out, right? But if they do raise rates to contain the inflation, they tank the economy worse than 2008. Because we've never had a recession since the 1970s where the Fed was raising rates during the recession. They've always been able to cut them. And the 70s were particularly bad because the Fed had to deal with inflation during a recession. But the difference is we were a sound economy in the 1970s. We had made a lot of mistakes.
Okay, so there you have it. I mean, Peter's laying it out. He's admitting the possibilities. He's telling everybody about how much damage the Fed can do if they decide to. Okay, now we look at the latest round of rate hikes here. The most recent one, actually, just a month or two ago, the Fed decided not to raise rates, which is interesting. If you look at Jerome Powell's comments, the chairman of the Fed, basically out there saying that the economy's strong, we need to raise rates to prevent inflation. Well, there's already been inflation. Look at home prices. All right, look at insurance premiums. Look at how much less you get now for your dollar compared to even a few years ago. Okay, so look at the chart and try to figure out what the Fed's doing. Obviously, they kept rates low all through the previous 8 years before Trump took office. Now they're raising rates. They know the last time they raised rates, there was a massive, even what they're calling as of today, they're calling that basically a financial crisis. They had to bail out the banks. Okay, so what's logical? What is the game? What is the end game of the Fed? What is their goal? Okay, we know that the last time the economy took a big downturn after 2008, we know that investors came in and they bought up houses. We know that the average person now is in more debt than they were prior to the 2008 peak. So if they wanted to help people, knowing that people are in more debt now than they were before the 2008 peak, if the Fed wanted to help people, why would they raise interest rates at all? So you have a bunch of debt. What's the worst thing that can happen? Interest rates go up. Okay, if you have locked in fixed rates, of course, it's not a big deal to you. But what you're going to see is your credit cards, they can go up on the rate. They just have to give you a little bit of notice. And then you're like, well, big deal, I'll just transfer it to a different credit card company. What if all the major banks decide to raise rates because the Fed funds rate is higher? People looking to borrow against their homes to keep up their standard of living, now all of a sudden those interest rates are higher, and it could just snowball. Or maybe the Fed, maybe they don't want to crash. Maybe they just want to keep everybody in as much debt as they can for as long as they can, because they know if there's a big crash or decline that people are going to file bankruptcy and discharge those debts, well, except for student loan debt and some others. Okay, or maybe they want to drop rates to negative and cause hyperinflation and cause home prices to go up even more. Okay, knowing that people are going to be out in the streets in many cases. Okay, so what do we think? Do we think the Fed has our best interests at heart, or do they have their own agenda? All right, maybe that's what Trump's been talking about. And that's some huge news that I want to take a whole separate video to talk about. There is talk, and right now it's just talk, of Trump actually taking over the Fed, and the future possibility of a whole entirely new monetary system, which I know seems way out there and way crazy, but I'm going to put another interview in the link. Look in the description or in comments. It's going to be of course, the full interview with Peter Schiff that we just heard a clip of. Okay, but also the possibility of entirely new banking system. All right, so check that out if you guys want to get more detail about what I'm talking about, and keep on this channel for more updates. Got some more big housing news coming out here with an update here probably early next week, and hope to see you then. Thank you. Bye.